Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 29th October 2020 in the international market. Due to election-led delay in fiscal stimulus and increasing coronavirus cases, Dow Jones tumbled 3.43% and Nasdaq tumbled by 3.73% yesterday. A massive equity sell-off and aversion to risk is seen. In US, corona-related hospitalizations are up 5% or more in 36 states. With COVID-19 cases increasing and election uncertainties, US 10-year closed at 0.79 unchanged. Let's look at the impact of COVID-19 in Europe. Ireland already moved to shutter its economy for 6 weeks. Germany will impose the toughest restrictions, closing bars and restaurants from Monday and a 4-week partial lockdown. France will begin a 4-week lockdown on Friday. So the second wave of coronavirus is real and India will have to be watchful for the same as well. In the crude oil market, with crude oil inventories building up, crude is under pressure and is trading at $39.30 per barrel. Also, lockdowns imposed in Europe and US winter will keep the demand tepid. Hence, crude short-term range is seen as $38 to $41 per barrel. In the currency market, with newly imposed lockdowns, no fiscal stimulus and US election uncertainties are making a case for dollar bull run. Dollar has breached 93.30 resistance level and dollar index DXY is at 93.40. Dollar index today's range seen at 92.84 to 93.90. 93.90 acts as a next resistance. USDINR with a high of 73.93 closed at 73.86 yesterday. USDINR's range for today is seen at 74 to 74.30. We need a sustained close above 74.10 to confirm a bullish breakout. Otherwise, 73.50 stands as a good support. Given a case for dollar bull run, we clearly see a weakness in our USD-INR currency, which we have been seeing for the last 4-5 days. In the domestic market, for bond yields to come down from the current levels, the central bank needs to ensure OMOs of government bonds and state bonds remain a weekly occurrence, which is somewhat signaled by RBI already. On account of Eid tomorrow, the trading week is truncated and we have both GSEC auctions and OMOs today. We, along with other market participants, see a firm demand of dated securities and OMO cutoff yields will decide the next course of action for GSEC. Please note that public sector banks have been net sellers and market is anticipating them to be buyers after today's OMOs, where RBI confirms the stance with lower cutoff yields, showing the clear intent to bring the yields down. Night research will be available with both GSEC auctions and OMO cutoff ranges by 10:40 am. We are keenly watching RBI's stance on today's OMOs to get a hint on where the market is heading. That's it for today. You are listening to Night Snippets with Parthesh Shah, co-founder of Fintech. See you next week with the new episode of Night Snippets. As coronavirus second wave is emerging in many parts of the world, stay safe in this festive season and happy Eid to all of you. See you next week.